I'm not here to teach you another trading strategy. I'm here to talk about something that can matter even more than your strategy, how you think while you're trading. Because after spending years around traders and watching an enormous number of positions open, move, and close, you start to notice something. People make the same mistakes again and again. Different accounts, different strategies, different markets, different levels of experience. But very often, the same psychological mistakes. And that's what makes trading so interesting. Most people assume that becoming a better trader means learning more indicators, more chart patterns, more technical analysis, more fundamental analysis, more market news, more predictions. But eventually, you reach a point where you realize that information isn't necessarily the problem. The real problem is what happens asterisk inside your head when money is on the line. Because trading is different from having a normal job. You don't receive the same predictable paycheck every month. You don't know what tomorrow will bring. Some days the market makes you feel like a genius. Other days, it can make you question everything you thought you knew. And that emotional uncertainty is where a lot of traders begin making mistakes. One of the biggest is fear. Fear can completely change the way you behave. You can have a perfectly good trading plan before entering a position. You know where you're getting in. You know where you're getting out. You know how much you're willing to risk. Everything is clear. Then the trade starts moving against you. Suddenly, the plan doesn't feel so clear anymore. You start thinking, maybe it'll turn around. Maybe I should give it a little more room. Maybe I should move my stop. Maybe I should wait another 5 minutes. And 5 minutes becomes an hour. A manageable loss becomes a much bigger loss. And now you're no longer following your plan. You're negotiating with the market. That's what fear can do. And here's the important part. The goal isn't to become fearless. You won't. I'm not fearless. No serious trader fear is a normal human response. The difference is learning how to asterisk make a rational decision while fear is present. That's a skill. And like any skill, it develops through experience. But there's something else you need to understand about practice. People often say that practice makes perfect. I don't completely agree. Practice makes permanent. If you're practicing the right behavior, that's excellent. But if you're repeatedly practicing the wrong behavior, you're becoming more efficient at doing the wrong thing. Think about a trader who repeatedly moves their stop whenever a position goes against them. They might tell themselves they're giving the trade room. But if they keep doing it, they're teaching their brain that discomfort means the rules can be changed. Another trader might constantly close profitable trades too early because they're afraid the profit will disappear. They're teaching themselves that uncertainty should be escaped as quickly as possible. Another trader might lose money and immediately enter another position because they want to recover what they just lost. That's not a strategy, that's an emotional reaction. And the more often you repeat it, the more automatic it becomes. So you shouldn't just practice trading, you should practice asterisk good decision making. That's a completely different thing. Now let's talk about something else that causes problems for traders. The obsession with being right. A lot of people enter the market with a prediction. They decide the market is going up, or they decide it's going down. And once they've made that decision, they start looking for information that proves them right. That's dangerous, because the market doesn't know what you predicted. It doesn't care about your analysis. It doesn't care how many hours you spent studying the chart. It doesn't care how confident you were when you clicked the button. The market simply does what the market does. And here's something every trader eventually has to accept. You don't know what happens next. Neither do I. Nobody does. You can have an opinion. You can have a probability. You can have a setup. You can have a strategy. But you cannot have certainty. Whenever someone tells you exactly where a market is going next, remember that they're giving you an opinion about an uncertain future. And their opinion may be influenced by their own position. If they're long, they're probably hoping for higher prices. If they're short, they're probably hoping for lower prices. That's human nature. The problem begins when you confuse a prediction with reality. Your job isn't to predict every move correctly. Your job is to manage the position when reality doesn't match your prediction. That's a completely different mindset. And this is why a professional trader doesn't necessarily need an incredible win rate. You might imagine that someone making money consistently must win 80 or 90% of their trades. Not necessarily. A trader can be wrong many times and still be profitable. What matters is how they manage risk, how they manage losses, how they manage winning trades, and whether they continue making disciplined decisions when the outcome is uncertain. That's why trading isn't really about proving that you're right. It's about asterisk managing probabilities and managing yourself. Now let's talk about your brain. Your brain is an incredible machine. But it isn't always your best friend when you're making decisions under pressure. One of the things the human brain loves to do is find patterns. That's normally useful. Your brain sees a pattern and tries to understand what it means. But markets create a huge opportunity for your brain to fool you. Give yourself enough charts, enough indicators, and enough historical data, and eventually you'll find something that looks meaningful. A certain level, a certain sequence, a certain shape, a certain relationship between two indicators. And once you see it, your brain wants to believe you've discovered something important. This tendency is sometimes described as apophenia, seeing meaningful connections or patterns in information that may actually be random. And this matters enormously in trading. Because if you can find a reason to enter almost any trade, then finding a reason doesn't automatically mean you found an edge. You can make almost any chart look convincing if you stare at it long enough. That's why more information doesn't always create better decisions. Sometimes it creates more opportunities for your brain to find the evidence it wants. Take something like Fibonacci levels. A trader might see a particular retracement and believe it represents the perfect place for a reversal. Maybe it works. Maybe it doesn't. Then another level becomes the next explanation, and another indicator confirms it, and another pattern appears. Suddenly, the trader has built an entire story around a market that they still cannot predict. The story feels convincing, but feeling convinced doesn't make it true. That's one of the most dangerous things about trading psychology. Your brain can give you confidence without giving you accuracy. And once you become emotionally attached to an idea, confirmation bias can take over. You notice the evidence that supports your position. You ignore the evidence that challenges it. You interpret neutral information as confirmation. And before you realize it, you're no longer analyzing the market. You're defending your opinion. That's when your ego enters the trade. And ego can be extremely expensive. Because the market doesn't reward you for being right. It doesn't reward you for winning an argument. It doesn't reward you for proving another trader wrong. The only thing that matters is whether your decisions produce a positive result over time while keeping risk under control. That's it. The purpose of trading isn't to be right. The purpose isn't to predict the future perfectly. The purpose isn't to impress anybody. The purpose is to make money while managing risk. And that requires a very uncomfortable skill, being completely comfortable with being wrong. You need to be able to say, my idea was wrong, my setup failed, my analysis didn't work. And then move on without turning one bad trade into 5 more. That's where emotional discipline becomes more valuable than another indicator, because technical knowledge can tell you what might be happening, but psychology determines what you actually do about it. And this is why 2 traders can look at exactly the same chart and behave completely differently. One takes the planned loss, the other refuses to accept it. One lets a profitable trade develop, the other takes the money immediately because they're afraid of losing it. One waits for a valid setup, the other enters because they're bored. One stops trading after reaching their daily limit. The other keeps trading because they want to recover a bad morning. Same market, same information, completely different behavior. And that behavior can determine the result. So if you want to improve as a trader, don't only ask, which strategy should I learn next? Ask yourself better questions. Why did I enter this trade? What was I expecting? What would prove my idea wrong? Did I follow my plan? Did I change my rules because the market changed? Or because I became uncomfortable? Was I reacting to information or reacting to emotion? Those questions can teach you things that another indicator never will, because eventually you start seeing your own patterns, and that's the real work. You begin to recognize when fear is taking over. You recognize when greed is influencing you. You recognize when your ego wants to be right. You recognize when you're trying to recover a loss instead of making a rational decision. You recognize when your brain is desperately looking for a pattern because it wants certainty. And once you recognize those things, you have a chance to change them. That's what separates knowledge from understanding. You can know that revenge trading is bad, but understanding it means recognizing the exact moment when you're about to do it. You can know that moving your stop is dangerous, but understanding it means being able to leave your original risk where it belongs. You can know that losses are part of trading, but understanding it means accepting a loss without allowing it to control your next decision. That's real trading psychology, not eliminating emotion. Learning how to act correctly despite emotion, because the market will always be uncertain. There will always be another unexpected move, another losing trade, another winning trade, another chart that looks perfect until it doesn't, another prediction that seems obvious until the market proves otherwise. You cannot control that, but you can control how you respond, and that's where your real advantage begins. The strongest trader isn't necessarily the person who predicts the market best. It may be the person who can remain disciplined when the prediction is wrong. The person who can take a loss without losing control. The person who can make money without becoming overconfident. The person who can sit out when there is no opportunity. The person who understands that every trade is only one trade. And the person who doesn't allow a single outcome to define the next decision. So the next time you're sitting in front of a chart and you feel that pressure building, don't immediately ask, "Where's the market going?" Ask yourself, "What is my mind doing right now? Are you afraid? Are you greedy? Are you trying to prove yourself right? Are you looking for a pattern because you need certainty? Are you following your plan? Or are you changing your behavior because you're uncomfortable?" That question might be more important than anything happening on the chart, because your biggest trading problem may not be your strategy, it may not be your indicators, it may not even be the market, it may be the person sitting in front of the screen. Learn to understand that person, learn to recognize fear, learn to recognize greed, learn to recognize your need to be right, learn to recognize the stories your brain creates when the future is uncertain. And most importantly, learn to make decisions without needing the outcome to go your way. Because once you stop trying to control what the market will do and start controlling what you will do, you've taken the first real step toward mastering trading psychology. If you want to understand more about the psychology behind human behavior, decision-making, and the way your mind influences your actions, subscribe to Philo Nexus.